Hi, I'm Anthony Newgrosh from BKL, and today I'm delighted to be joined by Steve Randel from our personal tax team. Hi Steve.
Hi there, Tony.
Steve, why don't you tell us about your typical clients here at BKL?
Sure. So my typical clients, Tony, are a broad mixture really of high net worth individuals. That includes their family members, incorporate a bit of a family trust with that as well, which Hazel's previously covered, and some entrepreneurs as well, both domestic here in the UK and overseas.
So what are the major tax issues that your clients typically face, Steve?
Well, I'm going to focus on capital gains tax predominantly, Tony, because for a long time now there's been a speculation, let's say, of capital gains tax rates increasing. I was still working in tax when capital gains tax was aligned with income tax rates for a short period of time, thankfully. And I think the view being that with under a new government that's looking to potentially, recover from the pandemic and bring in funds from elsewhere, that's been under the spotlight certainly. So for a long time now we've been talking to clients on capital gains tax planning, what they can do now in view of that happening somewhere down the line. And indeed it's moreover a case of talking about available reliefs, some very valuable reliefs that are just being overlooked. The fear is that for us as tax advisors, more often than not, we hear about a transaction after the event, by which time, more often than not, it's unfortunately too late to implement any planning. But certainly, by talking to us, we can cover the main issues that they need to be aware of, both, from a timing perspective, what they can do to structure their affairs to benefit from either a lower rate of taxation, a deferral on capital gains tax if it's pushing it further down the line, or indeed, in many cases, it's more beneficial to accelerate it and bring it up front and pay the tax now at the lower rate.
So Steve, you mentioned there are significant tax breaks available out there for capital gains tax. Do you want to just highlight some of the key ones for us?
Oh, absolutely. So it largely depends on the asset being sold, or as we refer to, being disposed of. And I suppose for property, more often than not, the one that most people are aware of is where a property is your main residence. Mm-hmm. It qualifies for private residence relief, which is a fantastic saving that many don't, I think, appreciate, in a sense that if you've only ever owned one home that's been their residence, then the capital gain is fully exempt by virtue of that relief. However, for individuals with multiple properties, for example, if they have spent time between the UK or indeed overseas, it doesn't matter, it doesn't have to be a UK property, there's the ability to plan, to nominate which property you wish to be your main residence. And I think more often than not, individuals fail to recognise that there's the ability there to vary a nomination. And indeed there is a window of opportunity with which they need to do that. So my advice would be, if you're thinking of either selling a home, buying a new home, or going into rented accommodation, for example, the minute your change of residences, combination of residences, occurs, let us know, because we can talk you through, well actually look, this is what you can do to potentially save capital gains tax on a property that you otherwise wouldn't have thought was available. Okay. And similarly, I think if we're talking about shares, the main one being if it's shares in your own company, business asset disposal relief is an incredibly valuable tool. It's currently capped at a rather shy 1 million, I suppose, unless you benefited from the historic rates of unused amounts. But currently that's the rate, the limit.
So Steve, what do you think the key messages are for somebody who may be looking to realise an asset here in the UK, or perhaps even sell a business?
The key message, Tony, is pretty clear and obvious from my perspective, certainly. It's that, talk to us. We need to know the earliest opportunity, ideally before, any paperwork is being signed, well in advance, so that we can do what is necessary to establish, well, okay, look, do you meet the criteria? If not, what steps can we take to get you there? Make sure they're absolutely clear on what they're benefiting from there, the ramifications down the line in the future. I think what's important here is that our guidance and counsel in that regard is based on prevailing tax rules, which are forever changing. So where we have advised, my advice remains clear. Look, if anything changes down the line, speak to us again, because actually you can't rely on what we've previously discussed if the rules, for example, have moved along somewhat.
Okay, thanks for that, Steve.
You're very welcome, Tony.